Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 192. Today is 10th of March, and there was considerable action in the market today with a sense of some sort of a ceasefire in the Ukraine-Russia war and with some hope that some peace talks will get through. Markets everywhere, including Europe yesterday night and the American futures, the Asian markets this morning, and then the Indian market in line with the Asian markets gapped up a few percentage points. But during the day, there were dips onto this gap, and the gap could not hold entirely. As towards the latter afternoon, the US futures again started to dip, and there were talks that no advancement has been made in any ceasefire talks yet. It also seems that FIIs took advantage and sold stocks again today. We'll know the number in a few hours. But pretty much today was, at least it seems like, a dead cat bounce where a lot of short positions had built up in the market and they got cleaned out. Today also being the expiry for the derivatives market, the weekly expiry. But a good sign today was that FMCG was back in action at plus 3%. FMCG had been lagging all defensive sectors so far. PSU banks were in action, metal stocks, real estate, consumption stocks. Pretty much a good number of sectors had gotten beaten down and they were nicely up today. IT, pharma, they were resting today. So this is sort of a seesaw that happens, that defensive stocks move when the high or the risk on stocks take a rest and vice versa. So still the direction is not clear. Nifty, Bank Nifty, several other indices are still below the 200 DMA. So one should not read too much into the bounces, although it's a pleasant surprise to have got this 2-day bounce, which has erased a lot of at least the weekly losses that we have on this. Again, on the broader indices, CNX 500 up 1.5%, small caps up 1.4%, mid caps up 1.16%. Or every index that we track were up between 1 and 2%. In terms of weekend investing small cases, several of them were up between 1 and 3.5%. NNF10 doing really well today. It had gotten beaten down the most as well in the last 1 week. And pretty much all these strategies are sort of, plus or minus 1% or so in the last 1 week. So pretty much in line with where the market is, maybe some of them a bit short than the market. But many of them have actually raised cash to 30, 40, 50% levels. So the recovery will be slower in case the market makes a V-shaped recovery from here. The gainers of the day, amazing run in BSE Limited, gaining 18%. That was not really expected, but amazing run. Bharat Rasayan 12%, EPL, TTK Prestige, TCNS Clothing. These were all the runners in the CNX 500 index. Coforge has been losing ground almost on a daily basis. Mass Financial, RHI, DSM, Team Lease all losing about 5% each, even on a strong day like this. So you would want to sort of look more deeper into these stocks. What is ailing these stocks to be down on such a good day as well? Another alert that I issued this morning was that there are several Telegram channels that are opening up in either Alok Jain or Weekend Investing names, and they are, one of them, this one, the Alok Jain official channel, has 900 odd subscribers already, and they are trading some bitcoins, etc. there. There's another channel which is this Alok Jain _ FX. They're doing some FX trading. So please don't fall into the trap of these fake accounts. We only have one Weekend Investing Telegram channel for all our small case products. We have one Stairs paid channel and we have one Stairs free channel. These are the three Telegram channels that we have. and we never ask you to pay money on those channels. Those are part of the subscription processes that are completed elsewhere. So do not fall into any of these traps. In terms of how the sectors have performed from the top, metals have lost the least at minus 1.5%. Energy stocks have dropped the least, second least minus 1.9%. Commodities at minus 7%, public sector enterprises minus 9.4%, IT at minus 10%. So you can see that the strength of the market is not in banking, where you're down 20% from the top. On autos, minus 17%, real estate minus 23%, and even pharma minus 11%. So what this sectoral relative performance is telling you that there's strength in the metals, there's strength in energy, there's strength in commodities, and relative strength higher than FMCG, banking, auto, etc. in IT and public sector enterprise also. So this is essentially what momentum investing is doing, is trying to stay with the strength in the market, and gradually it will shed out the sectors which are not performing and get into sectors which are performing. So this is sort of an automatic self-sustaining mechanism. Pretty much what the indices also do, but they do it over 6 months, 1 year period. Most of the momentum investing strategies will do it much faster, but this is the basic thesis, that you will allow a losing proposition to get out, even though you're getting out at a loss, and you will get into the strength of the market, which is likely to continue the momentum. One important strategy, a showcase that I have been doing since October 21, is this strategy which is very similar to EverGreen. It is not a public strategy, but it is very similar to EverGreen, where we are using CNX 200 index stocks, 20 stock portfolio, sipping into it every week, and started very near the top of the market. So my intentional purpose was that I start this towards the top of the market, and maybe it was the top, maybe it wasn't, but very near to that, and keep running it in continuity for next many years, because I want to showcase that you can do this by having regular sips and having a strategy that will give you even a nominal 15% if we are able to get over a longer period of time. That can really compound well. So this strategy is not a very high return strategy that this money is going into. It will probably do somewhere close to 13 to 15% maybe. But I want to showcase that by continuously sipping without bothering where the market is going, and by the strategy of self correcting in nature, the portfolio will perform. So this strategy has been on now for 23 weeks. We are doing a weekly sip into it. The XIRR on this strategy of the investment so far is minus 4.98%. The strategy from start date of 1st October is up 1.76%, whereas CNX 200 from that day is down minus 5%. So it has already outperformed the underlying benchmark by almost 6 to 7%. And because we are coming in gradually, our XIRR is still negative, but there is full confidence that over time this will do very, very well versus the benchmark. So again, just a reminder that sipping and allowing your investments to stay in the market for a considerable period, doing or following a strategy which is self-correcting in nature. This is very important. You just can't put the money in the market in anything and expect it to grow. The strategy, the underlying strategy has to be robust, wherein at least it meets or beats the benchmark indices. That is the minimum sort of benchmark you would want. Besides this, I also wanted to show you some charts today. So let me go to some charts. Uh, let's say trading view. And let's go candlestick charts. Let's add a moving average here. Let's make it 200-day moving average. Close this. Remove all of the lines. So let's see where we are in terms of the index and couple of indexes. We can see where we are. So Nifty, as you can see, had breached 200-day moving average on 24th Feb, the day the war started. We are still below it, although we have covered a good ground from 15,600 to almost 16,700 at today's high. So that's a very good bounce. This region here, let me see if I have some bubble. Okay, let me just say that this region here, from 16,800 to about 17,000, this is going to be resistance, good resistance, because we are nearing now the 200 DMA, and the bearish gang will want this to not breach on the higher side. And we've gone 3 days on the trot, and the main issue has not been solved yet. So this seems to me like a dead cat bounce for now. But once we do clear 200 DMA, then I think the animal spirits can return, and we can hope for a better outcome post that. Let's look at Bank Nifty also. So Bank Nifty again is in a similar situation to Nifty, where it is below the 200 DMA, and it actually came to below the pre-pandemic level also, and that's where it has bounced from. And from all practical perspectives, this has gone flat in the last year and 15 months. So it is basically consolidating before the next move will start. Let's also look at global markets, where we can look at S&P 500. The S&P 500 has also broken down from its 200 DMA, and it is making lower highs, lower lows. Again, this 4450, 4500 will be very crucial level, which will sort of signal that the downtrend may be over, but it is still lower than that. And lastly, let's take a look at Nasdaq. Uh, Similar charts, where it broke the 200 DMA, went and retested it and broke down again. So this is a pattern which is not very encouraging, and this will have an overhang on the markets for some time before we can come back above the 200 DMA. So global charts are weak. Our charts are not as bad, but the FIIs continue to sell. So once we have our markets above the 200 DMA, maybe the markets will have more confidence, and the FIIs also may stop the selling at that point. So till then, we will remain somewhat in the choppy waters. But if you are following a strategy, and if you are dedicating it for a long period of time, you need not worry about these market noise, and just continue to sip and continue to invest in your strategy. So with this, I come to an end to this daily bite. Thank you so much for watching, and I will see you in the video. Good luck. Bye.